Gaurang Shah, Sr.Vice President, Geojit Financial Services, joins me this morning. Gaurang, good morning. Not sure if I can call it that just as yet. And it so happens that every Wednesday that you happen to join us, there is some major development on the West Asian front. So what do you make of the latest that we are picking up on the conflict front? Because the naval blockade continues. There is a ceasefire which also gets extended, but no real roadmap for peace talks.
Thank you, Kartik, for having me on this show. Now, I don't know whether I'm a good omen or a bad omen, to be very honest with you. But yeah, let me give a small disclosure that all recommendations that I'll be sharing with you this morning on your show, Kartik, they're part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So, earlier, Kartik, when this war was going on, ceasefire was something that excited the market. And yesterday, late night and this morning, we get a news that the President Trump has extended the ceasefire indefinitely. Now, honestly speaking, Kartik, the mess that has been created, I think he's finding it extremely difficult to get himself out of that mess. And he's trying all sorts of, way out, but Iran doesn't seem to be obliging. So we'll have to just wait and watch. We have recovered quite an extent, Kartik, from 22,100, 200 to 24,400, 500 in a matter of about 2 weeks. Profit booking is definitely expected in this kind of a scenario when uncertainties is at an elevated levels. And today is that day, Kartik. And unfortunately, HCL Tech, like you rightly mentioning, did deliver a disappointing set of numbers, and so was the verbatim in terms of outlook for business growth. As a disclosure, we do have positive coverage on HCL Tech and likewise some other IT companies, broadly with a 1.5 to 2 year kind of time horizon. So broadly speaking, Kartik, the range in the market, Nifty spot, if you will, 24,000, 24,200 on the lower side, 24,700 to 24,800 on the higher side. This wide range purely because of the uncertainty and the unfortunate, confusing tweets on Truth Social that comes out from President Trump.
Let's move away from President Trump if we can and just focus on corporate earnings and other corporate developments. Now, I want to go a little deeper into this Indian IT services space, and HCL Tech, of course, despite a 4% rise in net profit and a dividend of 24 rupees per share, the guidance for FY27 does not bode well, and that is something that seems to be spooking investors. Also on a day when you have another tech major, which is Tech Mahindra, set to come out with its own set of results. Overall, what do you make of the IT pack for this entire financial year? Because we haven't seen the best set of numbers even from Wipro.
Challenging times you can't expect, Kartik. Anthropic AI had just been very recently created absolute hell for the IT sector, not only in India but also in the global. And let me say this, Kartik, for the benefit of your viewers, that IT sector is going to go through a lot of innovation. And possibly the run rate of that innovation is going to it's going to be faster than ever before.
Okay.
So you have to have elevated risk appetite and an understanding that yes, this is a fact. And it will totally depend upon how the IT sector will react as to what the news flow is. Negatively, yes, you will have a bad time. Positively, you will have a good time.
Right.
But we are of a belief that you cannot write off IT sector as an investment theme because that's going to be an integral part for any small, large, medium-sized corporates or for individuals like you and me.
Okay, so a higher risk appetite if you really want to dabble into the IT sector and of course look at a longer term horizon. That seems to be my understanding of what you're saying. Meanwhile, two interesting sets of numbers in the IT space expected today. One, of course, like I mentioned, was Tech Mahindra. The other is also L&T Technology Services. Overall, what do you make of the commentary that is likely to come? Do you think the outlook is likely to be as pessimistic as what we have heard from HCL Tech?
I don't think so, Kartik. And let me say this, Kartik. HCL Tech used to be one company which historically over the past couple of financial years and quarters has delivered better set of numbers when you compare with large cap names like TCS, Infosys, HCL Tech, etc.
Right.
Unfortunately, possibly I would give it as a one-off quarter wherein the numbers are negative.
Okay.
Long term, I believe that, and of course, the verbatim given by most of the IT companies post third quarter numbers and post fourth quarter numbers. AI is something that they are excitingly looking forward to, and they're investing also, Kartik,
Right.
either through more headcounts or through acquisitions.
Right.
So we believe that this will turn out to be productive over a longer period of time.
All right. So over a longer period of time is what seems to be definitely the word coming in. Meanwhile, I also want to talk about Nestle India. And of course, we saw a fantastic set of numbers, 26% or so growth. And then add to that the fact that that the stock rallied as much as 8.4% yesterday. This morning, again, we are seeing Nestle is up. Nestle India is up about 1.5%. Overall, in the slightly sort of, confusing landscape, because inflation may or may not directly or indirectly impact FMCG stocks. We are seeing some sort of mixed cues coming from this sector, but Nestle India continues to be holding its momentum even today. Good time to book profits or good time to enter this rally?
Kartik, I always say one thing, Kartik, that there is always investing is an art in stock market, and so is booking profits is also an art. You can't be going on, being your greed will unfortunately destroy your investment philosophy and thesis. And in that greed, Kartik, your profitable investments will also turn out to be loss making. So it's totally depending upon individual's risk appetite and the expectation of return. When you get that, do according to what wisdom suggests you and make a fine sense of judgment. Having said that, look, Kartik, India is, and India will always remain a consumption-driven economy. In inflation times, in bad times, you may switch over to more affordable products. But when you again get back to normalcy, you start living in the lap of luxury. Only one thing that I'm worried about initially, okay, this is just the primary cautious that the Met and SkyMet has given, about 92 to 94% deficit from long-term averages of monsoon. But these are premature stages. I think if the weather has to create a favorable pattern, and if the rain gods have to be kind enough, then I think the distribution will be equal. In that case, demand from semi-urban and rural India will be extremely, extremely positive. So we are positive on Nestle, Britannia, HCL, ITC, Tata Consumer, Godrej Consumer, Dabur, Marico, to name a few, from a long-term point of view. Only problem is input cost should be managed well.
Right. Input cost absolutely becomes critical. Meanwhile, let's move on to other companies which are expected to announce their results today. And this is outside, of course, of the tech sector alone. And this includes names like SBI Life Insurance. Again, we saw some correction in that stock yesterday, but this morning it is holding some ground. We are also seeing, again, partly linked perhaps to inflation, to input costs that you were talking about, stocks like Havells India as well as Trent, which is purely into the retail space. What do you make of possibly, these other sort of consumer-driven brands like, and discretionary spending, if I can call it, like life insurance? How do you see sort of their landscape panning out as far as at least commentary for this financial year goes?
So, Kartik, well, FMCG is non-discretionary. You need to spend, right, for your daily consumption.
That's
items. Right. For discretionary, names like Havells, Blue Star, Voltas, names like Trent. Now, amongst these, Voltas, Havells and Trent, we have a positive coverage. And I think numbers are today, tomorrow. I'm not too sure about it, Kartik. So no forward-looking statements. But I'm sure that, spending capacity, not only in metros, tier 2, tier 3 cities is going to go up, but that spending capacity is also going to go up in semi-urban and rural India. And aspirations have gone up, specifically in semi-urban and rural India. I travel length and breadth of the country, Kartik. And at ground level, what I experience is the aspirations. Gone are the days when you see a demand for an entry-level motorcycle from semi-urban rural India. That aspiration has gone up to a Bullet, which is a high-end premium motorcycle.
All right. Of course, so aspiration is what is likely to continue driving even discretionary spending. Meanwhile, oil prices, we have sort of, covered it. We are talking about input costs, but oil prices likely to hover in the range of $98 to $100 a barrel is not just going to be bad for the Indian rupee, which of course is continuing to sort of, face renewed pressure, but is also going to be bad for the overall economic growth. And that is the latest that we are picking up even from Moody's, which has cut down by as much as, from 6.8% to 6%, the growth forecast for this financial year. Meanwhile, we are also seeing FIIs not being bullish at all on the Indian story. Like, if I remember correctly, you had said this last week or the week before when we were speaking, Gaurang, that the story will actually be driven by DIIs and by retail investors and not as much by FIIs. But the fact that FIIs are also continuing to pull back from the Indian markets, it is going to keep the pressure on the sort of overall earnings and the kind of returns that investors are expecting from their investments.
So, Kartik, DIs will continue to dominate. This is my strong belief. Even in the month of March, you look at the numbers that AMFI has given out. So that, rest assured. As far as FIs are concerned, I will leave it to their wisdom and fine sense of judgment as to when they want to come back. And one more thing, Kartik, since we are discussing about it, though you didn't want to go back to it, but I'm just referring it. $166 billion in terms of tariff refund is what US is considering. And this number is likely to go up to $200 billion. I think President Trump has got a lot of things to take care of in his own hometown, in his own country. So that's just one reference. So I'm talking about the crude oil front and the outlook. Well, I think GDP revision downwards will depend upon how government manages India's energy requirement and where do they source it from. Rupee dollar equation does create a negative impact, and it's a two-sided blade which cuts us from both the sides in terms of GDP growth rate, and it also has a huge impact on the inflation. So my sense is that a little bit premature to make a comment about it, but if we are able to manage our energy requirement at a reasonable price point without large dependency on US dominated trade for energy requirement, then I think we should be better off.
All right, let's leave it at that for this morning. Gaurang Shah, it's always a pleasure having you here with
Thank
us
you.
on News 9, and thank you so much for your time.